So as a buyer, let's talk about how you should actually lender shop. And yes, as a lender, I'm teaching you how to lender shop within my own competition. But let's talk about the best way to do it. So it is not uncommon for us as lenders to have buyers come to us and go, hey, I found this rate with this lender, this bank told me they could give me this rate, etc. That's not uncommon for us. Many people will lender shop, just like if you were buying a car, you may search for different banks. If you're buying car insurance or homeowners insurance, you're gonna look through different groups. That's not uncommon. The problem is every time someone comes to me and goes, well, hey, so-and-so promised me this rate. And I go, okay, for how much? And they go, I don't know. I'm like, okay, but what is the cost of that rate for you? You need to know how much it costs you. And they're like, I don't know. They didn't tell me. Okay, what's their origination fee? I don't know. They didn't tell me. So I have to go back and go, okay, well, you were given a certain rate supposedly, but you have no idea how much it's going to cost you to buy down into that rate. It could be costing you $10,000 more in your closing costs than what it would cost me for a marginal difference in the rate. So when it comes to lender shopping, let's talk about what you really should be asking instead of what interest rate can you give me. So the way that interest rates work, there's your par rate or your rate for no money. The rate you get based on your credit profile, your loan type, your property type, that doesn't cost you anything to lock into. Most people are not going to lock into that rate because it's going to be high. What most people are doing is they're buying down into better interest rates. And the further you want to buy down, the more that costs because it's more advantageous for you. And the servicer is getting less and less interest out of you across the life of the loan. So you're going to pay more to have that better rate. Just like you may pay more for a really nice brand of something versus if you're willing to buy the cheaper version of it. So to get into the lower interest rates, it's going to cost you money. Now from lender to lender, that's where the pricing is different. So a certain rate, a 6.5, for example, may cost you $2,000 with one lender for the amount of buy down. You go to another lender and that could cost you $3,000. You go to another lender that could cost you $1,000. That's what's going to differ from lender to lender. So when you're rate shopping, I always tell people, don't ask, what rate can you give me? Ask them, what rate gets me to the payment that I want and how much does that cost? And you can kind of figure out what rate gets you to the payment you want by using mortgage calculators online, right? Put in your purchase price you're thinking, estimate taxes and insurance for your area, and then figure out, hey, is that a 6? Is that a 6.5? Is that a 5.8? What rate at least starts to get me to the payment that I actually want? So that way, when you're going to lenders and you're shopping and you're like, hey, I'm trying to get a payment of $2,100, which I think is around a 6% interest rate. What would it cost me to do a 6% interest rate with you? That's how you're actually lender shopping for your price. And it's not that one lender can't give you a 6. We can give you any interest rate you want. It's just a matter of how much it's going to cost you to do it. So that's what's really going to differ from lender to lender. So I would be asking instead of, what rate can you give me? Or I just want to know your lowest rate. I mean, they can be like 2%. The question really is, this is the ideal rate I'm looking for my payment. How much would that cost for that buy down? And that's where you can compare, just like if you're comparing car insurance, right? You're comparing premium to premium to premium based on the amount of coverage that you're looking for. The second way you lender shop, when you're talking about what's going to be advantageous to you or not, is the origination fees. So almost every lender will have origination fees, and that may be broken down into underwriting and processing fees or whatever. But that will differ from lender to lender. I have seen some lenders that charge at least 1% or more of your loan amount in origination fees, which can add up very quickly. Some of the lenders like myself, we have a set origination fee. Other lenders may have no origination fee like we do for VA loans. So that can differ. That can be thousands of dollars difference in closing costs. So that's another important piece when you're shopping from lender to lender. You're asking again, how much does a specific rate cost you, the rate that you're looking for, and what are their fees as a lender to do your loan? And that's going to help you figure out what your actual cash to close may be and differ from lender to lender. The third thing to consider when you're shopping from lender to lender is online lenders versus smaller banks like credit unions versus local lenders like myself. Online lenders, the tricky part is you have no idea if what they're telling you is accurate. You're rarely, even with a human being, they don't answer the phone most of the time. The numbers can be very skewed, and they're just really trying to just get as much business as they can. So what they're quoting you could be completely wrong. So I tell everyone, like, If you are trying to use an online lender, I would suggest getting another quote as well, just to make sure that it's what you actually think it is, because I see a lot that come to me with these like bottom barrel rates that they're being told, and then when they actually start to do more applications with them, they find out that's not their rate at all. And I remind everyone, Dollar General doesn't sell big screen TVs. So if you think you're getting something for this amazing low price that's really expensive, you got to ask why. You have your credit unions, like a lot of people start with the bank that they bank with. That's one option. Really just depends on if that's going to be advantageous for you. I wouldn't assume because you've banked with them for 28 years that they're going to give you something special. Really doesn't work like that. But some people start with their credit unions that they bank with. And then what we always recommend is at least checking with a local lender like myself, because we know the area the best. We know what your taxes will likely be. We know what insurance costs will likely be, so we can quote you the best mortgage that we can. And your local lenders may also have access to programs that other lenders do not. For example, like down payment assistance programs or local grants that your online lenders can't have, or sometimes even your credit unions don't have access to. So sometimes your local lender may actually have a better program for you that lowers your closing costs or lowers your interest rate. Now, 99% of the time, if you're working with a realtor, they have a local lender like myself that they work with and can help you get in touch with. If not, you can always start to look at local lenders in your area if you want to start with the pre-approval first, which is what we recommend, but it doesn't usually happen that way. So again, when you're shopping lender to lender, which I know you will, and that is okay, we welcome it, you want to be talking about what is the cost, not what is the rate. That's going to actually let you compare. What is the cost of the interest rate you're looking for? What are their costs to do your loan? And then think about where you're finding that lender. And again, would Dollar General sell big screen TVs? No. So double check if it seems too good to be true. I hope that helps. Send me a message if you have questions, or we can talk about your specific scenario.